Hi, this is P.R. Sundar. Welcome to Pre-Market Report sponsored by Delta.exchange. An important announcement. So, coming to Mumbai after a long time, 17th and 18th of January 2026, my first workshop in 2026 will be in Mumbai. I think for a long time I have not been to Mumbai. So on January, I will be coming definitely. Our Chennai workshop date 24 and 25. Those who are interested can look at the description for the contact numbers and can register. Yesterday in the post-market report, so I mentioned few things. Number one, what happened yesterday was probably due to expiry related issue. And number two, when expiry closes somewhere near the low end of the range. If you see yesterday, the Nifty closed at around 1 week low. And then Nifty fell continuously for 3 days. And for 4 days, Nifty closed below the opening level. So when this kind of thing happens, uniformly, the first trading session, market recovers. So in case if market does not recover on the first trading day, then market become very, very bearish. So as expected, now the GIFT Nifty indicating about 100 point gap up for Nifty. So that's number one. And number two, it's not simply recovering because of its losses. The global cues are really very good. The US markets recovered a lot from the lows. And now, like I would say, artificial intelligence related stocks started falling. But despite that, the US markets has almost recovered half of the losses it made from the recent high. So that shows the strength of the US market as well as the Asian markets. So that is also helping this sentiment. And number three, FIIs were net buyers. But again, as I told you, whatever they have done yesterday, we have to write it off. If you look at the previous month expiry, that is the October series expiry, FIIs were net buyers for 10,000 crores. But what happened, after that, the next 1 month, Nifty could not close positive. And a monthly candle, November series, Nifty was negative. So, we are recovering from the oversold levels, we can say. Looking at the open interest, people have sold 26,000 short straddle for a combined premium of about 300 points. So the lower end of the range becomes 25,700. That's going to be a good support. And resistance at 26,300, which is slightly above all-time high and about 50 points higher than the last week high. So we can expect, the Nifty to trade range bound for the next few trading sessions. Once the month begins, the calendar month, then maybe, like monthly auto sales data, cement sales data, some manufacturing PMI data, US jobs data. So those things can come into the picture. And in addition to that, Fed policy, RBI policy, the RBI policy is going to be more interesting because, RBI governor himself has stated there is a room to cut the rates. But I do not know how they are going to cut the rates, given that fact that, the Indian rupee is depreciating at an all-time low. One side, Indian rupee all-time low, and on the other side, the interest rates are still high. Even in Dubai, there are banks which are offering 5 to 6% interest rates on fixed deposits. And the Dubai currency is equivalent to US dollar because the Dubai currency is always pegged with US. So therefore it never appreciates or never depreciates against the US dollar. So therefore the interest rate in Dubai is as good as interest rate in US. And you are getting 5% interest in Dubai and you are getting only 7% interest in India, and then you only get 2% extra, but then you carry the currency risk. So the currency has depreciated about 10% in last 1 year. So there is a report that says that NRI deposits have come down by 40% in the last 6 months. So that's because there is no more interest rate arbitrage. But if RBI tend to reduce the interest rate further, then so that the interest rate differential will become even lower. So potentially that will destroy the NRI deposits. So India is always looking to raise the dollars, so we'll have a difficult time. So I do not know, so logically speaking, and RBI should not reduce the rates, but who knows? They may be doing under political pressure. However, in US, now it's widely expected that Fed will cut the rate by a quarter basis point. So, number one, we went very close to all-time high, came under profit booking. So that profit booking dragged the Nifty almost 400 points. And now with a new series starting, so we might try to attempt a recovery. And then again, somehow I feel that unless there is some news about India-US trade deal, Nifty is likely to consolidate maybe 500, 600 point plus minus from 26,000. So that is the view for December. But December is a 5-week series. It's a long series. So there is enough time. No need to be in hurry to take positions. And yesterday, though Nifty closed lower than the opening level for the last 4 trading sessions, Nifty closed negative for 3 trading sessions, and Nifty fell more than 100 point in the last 1 hour for last 2 trading sessions. And despite that, the volatility index has come down by more than 10%. So that indicates, a range-bound market for maybe for another 1 month. So let us see what is going to happen, and keep watching for, as usual, HDFC Bank, ICICI Bank, Reliance Industries, and also TCS and Infosys, because I think Nasdaq now recovered nearly 1,500 points. That means nearly 6% from the recent low. So that should help IT sector to stabilize in India. So keep watching for some stocks like BSE, MCX, and IEX. Right? So IEX is seeing India Energy Exchange, seeing a lot of activities, and in fact, even for investment also, that maybe look into. It went up to 210 rupees. From there, it has corrected to 140. So that's about 35%. And then, there are some stocks like LG Equipment. Even yesterday, SB Mutual Fund has bought a lot of LG Equipment shares. So these are all some of the mid-cap stocks we can focus on for this month. And especially, it will be interesting to see both BSE and MCX. I think MCX has hit all-time high yesterday. But because the IV crashed, option premiums are not very lucrative. So we are going to gap up. Whether the gap up will sustain or whether Nifty will take out 26,000. So first trading day is very, very important to know the trend for the month. So because there is a 100-point gap up, and if Nifty sustains, Nifty closes about 26,000, once again, the bulls will be back with the hope of taking all-time high. So let us see what's going to happen. Hope you enjoyed watching this video. Thank you for watching.